Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, great day today. Looks like oil and the commodity ETF GSG, one of my buy recommendations, has broken out. Really, pretty much everything across the board was up for us. But tonight, I wanted to initiate a new buy recommendation, and that buy recommendation is basically China. So let's get into it. In the past, I've been bullish on FXI. It's kind of the general Chinese ETF, and it's been like, but my new recommendation is going to be on the Chinese internet ETF. Not sure what that S is doing. It's late here. I'm sorry. I apologize. But I'm going to go with KWeb instead. It's a little more aggressive, but really the reason is because of this big 2+ year pattern breakout that we had back in early 2025 and the big run up from, let's call it 27.5 to 40, 41. And this is a weekly chart. So each one of these little bars represents a week of price action. So over the last, I'd say 3 months, it's been declining. Same with FXI. My previous buy recommendation, I went to a neutral rating, if you remember, after some really big gains. And so I think this is time to step back into Chinese equities. In particular, I'm going with KWeb and the this pattern. If you measure the base of the triangle and project that distance upward, you come up with a 50, let's call it a $51 price projection. And we're at approximately 38, let's call it. Um, so what is that? Uh, I don't know, that's about 35% or so potential upside based on this pattern. So it doesn't mean it can't go higher, doesn't mean it's going to get there, but that's why I like this over FXI, the general ETF for China, because I don't really have a bullish pattern at this time on that. So this is the new buy recommendation. Let's take a short-term look just at this little part here. And so this is where we're at. Here was the decline. This is FXI2 declined from early October into December. And then it had a little rise up. We got our bullish rainbow convergence right here, all these moving averages coming together. And that should either create a pause or prices should come back down towards this. Now, so when this happened, this is a daily chart. Each one of these bars represents a day. So not today, but yesterday when we had this huge update, this big gap up, I think it was up about 5% or so. And then today corrected like 2%. So is this a type 2 convergence where it's coming back towards the moving averages? And if it holds, it promises a new higher high. And if so, how far does it come back? Is this it, the 2% that we got? So I just don't want to miss the bigger picture because of this daily chart. So I would recommend buying some if it opens around this area. If it pulls back further, I will be buying more. So, I bought some here and then sold a little bit and then bought those shares back today. If it comes back here, I will be adding more. And then, so that is my recommendation. I wanted to show you how emerging markets has been the place to be. I think our market was up, I don't know, 15% last year. The emerging markets were up like a ton. And so, ours has been kind of the weaker market out there. And so, if you look at the beginning of 2025, emerging markets, after underperforming so many, 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 many years, began to outperform. So, we want to we want to be where we can make the most money. So with the least risk. So after this pullback of a couple months in the Chinese market and in K-Web, this has given us a buying opportunity. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Please tell your friends, neighbors, and family. Uh, have a great evening. Good trading to you tomorrow. Adios.